Hello and welcome everyone. It is Wednesday, the 24th of November. It's just ticked past 1 p.m. here in the capital. If I could get a couple of Ys in the Q&A just to let us know that we're coming through loud and clear, just to let me know that I can continue. Of course, don't want to be talking to ourselves here. So a quick Y in the chat would be perfect. This is the third in a series of 5 year ahead webinars that we're doing, year ahead outlook. So we've already covered equities and crypto last week, which of course you guys can all see on the eToro Academy as well if you want to go watch back any of those. Today we're focusing on international opportunities, and we have a great lineup of speakers today as I'm joined by Adam Vitesi, Antoine Fraisse-Soulière and Nemo Chin. As you can see from the slide that I am sharing, we will be covering a vast array of topics. So we'll talk about China, we'll go into Asia in a little bit more detail there for sort of a longer term outlook. We'll revisit the UK, which seems very overlooked and underloved. So I'm looking forward to hearing about that. We'll go into more detail on Europe too, and we'll also touch upon our global investor survey. And as usual, we will have room for a Q&A at the end of the session. So do feel free, guys, to use that Q&A as a place to get your questions in, and we will absolutely have time to answer some at the end. Now, before I introduce our speakers, I just want to go through the disclaimer, which I know you should all be able to see anyway. But here at eToro, we're all about putting on as much free education as possible, and that's part of the reason we're doing these webinars along with everything else that we do. So this is a marketing communication, should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. The material has been prepared without taking into account any particular recipient's investment objectives or financial situation, and has not been prepared in accordance with the legal and regulatory requirements to promote independent research. Any references to past or future performance of a financial instrument, index, or a packaged investment product are not and should not be taken as a reliable indicator of future results. eToro makes no representation and assumes no liability as to the accuracy or completeness of the content of this publication, which has been prepared utilizing publicly available information. Now we can move on to the good stuff. We've got a star-studded panel, so let me introduce everyone. So Adam, whose professional commentary is regularly published in the financial media and boasts almost a decade's worth of experience in financial markets and investment management, specializing in the UK and portfolio diversification, which makes him perfect for today's session. Antoine is based in France, is involved with their podcast out there, the Digest and Invest France version. So do check that out. He has over a decade worth of experience in financial markets, both at eToro and in sort of the brokerage and asset management industry. His regional and global economic and market analysis is widely published in the financial media too. And then to complete the dream team, the dream panel, we also have Nima, who is a market analyst, senior account manager in the Asia Pacific region. He also has significant financial market experience with a lot of focus on China, crypto markets, fintech, and sustainable technologies. His market commentary has also been published in places like CNBC, Asia Times, CoinDesk, amongst others. So without further ado, guys, how are we all doing?
All good, thank you.
All good. Yes, thank you, Sam.
Great.
Yeah.
Thank you.
Thank you for having us here.
Yeah, no, I'm looking forward to it. Should be a really good session. And guys in the chat with the Q&A, you know, I'll be keeping an eye on that. And as I said, I'll put some of your questions to the guys at the back end of the webinar. Just for us to kick off then, I want to go through a quick poll before we go into sort of the section on China. And the question is a simple yes or no, maybe not so simple actually, but is it time to look outside of the US for investing opportunities? The US, of course, has been on an incredible run as of late, but is it now time we look elsewhere? So you should all be able to see this. If you look on the webpage that you're viewing, I'm just going to highlight it all for you there as well. So guys at home watching it, please do have a vote. Is it time to look outside the US for investing opportunities? For some reason, I think the poll was set on a short timeline there. So for getting your answers in, please do just type in yes or no into the chat, and I'll keep a watch on that. I'll try and make the next poll a little bit longer. But without further ado, and I'll keep an eye on the chat. Nemo, it'd be good to sort of get your thoughts on this and China in general. Is it time to look at China again?
Well, first of all, I think I think it is time to look at China. I think, and also I think not only China. I think it's time to look at all set of U.S. opportunities in generally speaking, right? And when I was invited to this panel, and one of the topics that I would like to touch base is the overview of the Asia outlook economic wise in 2022, right? And it's such a big subject because we all know that Asia covers 30% of the Earth land and having like nearly 5 billion population that account for about 60% of the world population, and obviously it has a huge impact on the global economy, right? So to answer your question, yes, I think China deserves a new look after a tough year. And if I randomly throw some numbers here, right? So look at China's GDP growth in 2021. Now it's nearly about 8%, right? And I think it's somehow meet analyst expectation, and also by looking at other macro indicators, such as exports and in their balance, everything. I think it's pretty healthy. But I think what drives the market is more towards to the concerns. Concerns about the regulatory policies, especially about the policymakers, how they rule the economy and the companies' operations over there, right? So this really drives the fear that really puts like restrictions of investors, both for retail investors and institutional investors, to invest to the Chinese companies. Despite now talking about some facts, we know that Alibaba that had a bloody year, and this is mainly because the regulatory policies that giving them a hard time. And this is, we're talking about a serious chain of actions, starting late last year, all the way, throughout 2021, right? So I think yes, definitely. I think this is a great opportunity. Is because I think the growth risks are there, are well priced, and also the companies, they are great companies. They are still generating great profits quarter over quarter. So, and also if you compare the valuation, from the Chinese internet companies versus the U.S. internet companies, now the price is very attractive for many retail and institutional investors. This is why, in headlines you can read that many of the institutions and hedge funds, invested and increased their exposure towards China equity markets. Yeah, and obviously I can also, I can also touch base on the general overview of Asia, right? So Asia, I think, one of the most important thing to share with our audiences here, I think Asia Pacific region, has the very well controlled of the spread, of the corona pandemic, overall. So we expect basically, for the regions that have a quick reopening, such as last year in China has really quick reopening, is because they have a very straightforward policies in place, right? To put restrictions on the traveling and tourism and everything. So to put China in a position to have a strong rebound on its economy. right? So this is same policy. I call it like zero tolerance for COVID cases. That somehow it's across Asia, right? So we see a very strict restrictions in Singapore, in Taiwan, in Korea, in Japan, right? So this is kind of the foundation for 2022. We can, all these countries and economies cannot afford a series, another round of serious lockdowns, right? So that will really give a lot of pressure on its economic growth in 2022. But I think in the reality, this is something that investors should know, that Asia across border, that they have a very strict policy compared to the Western world, right? I don't know what's the policy now in the UK, but I believe that it's a lot loosened compared to the China policy, right? And second of all, I think by talking about GDP growth in China, so many of the financial institutions has downgraded the GDP growth in 2022 for China. And this is mainly because China is now more focusing on the domestic development, because they have more restrictions, to bring investment into China itself. So they have been shifting, from the 2022 all the way up until today. So in 2022, basically, most of the economists has downgraded the output. GDP output for China, but overall, the message here, I think, for Asia is the year of normalization. It settle things down, right? And also, I think most importantly, for the policy risks that we have, talk about, I think it could be come to the end, because recently we haven't heard some major news against the China, specifically to China internet companies. Right. So overall, I think in 2022, in the coming year, I think could be a great opportunity for our investors to have a look and review the investment opportunities again for China and for Asia. Yeah.
Awesome. Thank you very much. And yeah, as you mentioned, for those that are interested in having some exposure or looking into having some exposure to China and Asia, of course, we've got those smart portfolios as well that all our eToro users can take advantage of. For example, China Tech, China Car as well, that you can type into the search on eToro to check those out. Next up, then, fingers crossed this poll works for our users. I'm going to bring it up in front of the screen for you all now. If it doesn't matter, if it doesn't work, no problem. We can absolutely deal without it. But the question for the audience here is, apart from the US, which country do you think performs best next year? So the options I put there, and of course you may have a completely different view, but from what you can choose from, I've gone for Germany, Turkey, UK, Australia, Japan, France, and Brazil. So that should be up there for a minute or so. For guys at home, please do have a vote on that. I'll be keeping an eye, as I said, throughout on the Q&A. So please do take advantage of that if you can as well. But yeah, I'll leave the poll up for a little bit longer. For those that are in the markets, and yesterday you would have seen that the Turkish lira was on a bit of a roller coaster. I saw against the dollar it was down at 1.17% in a day, which was pretty extraordinary. I know it's pulled back a little bit since then. But yeah, let's go 10 more seconds on the poll. The answers, if you haven't already voted: Germany, Turkey, UK, Australia, Japan, France, or Brazil. Let's get the results in, and the winner, just a big shout out to the UK. Me and Adam will be happy with that. 30% for the UK coming in there. Germany 28.6%. France, Antoine, only 1.4%. Maybe you can comment on that later on. But Adam, I guess this brings us to you and your sort of views on the UK. Do you feel it's sort of overlooked and underloved at the moment?
Yeah, absolutely. I think it's been fair to say that the UK market has perhaps been unloved for some time now, and we can put that down to a number of factors. I mean, more recently, since 2016, we had the referendum of the UK leaving the EU, and that perhaps presented somewhat of an air of uncertainty for investors looking to put money in the UK. As we know, classic enemy of the markets is uncertainty, and some may have decided, well, look, do you know what? That presents a complication that I'm just going to leave that alone. And, unless those who have a home bias, UK investors, others may have decided to seek opportunities elsewhere. Also, on a more, a slightly longer term scale, we have seen the regulatory environment in the UK not be quite so tech friendly, and with tech, being, say the booming sector of certainly recent years, the UK market has probably suffered because its sector distribution is very light on tech, and it is heavier on perhaps more sectors which have been a bit downbeaten, such as commodities and so on. So that's maybe some areas as to up until now why the UK has been overlooked. And then if we sort of fast forward a bit to right now and what people are worried about at the moment, there are some headwinds, UK specific, in that there will be corporation tax increases, and for the individual, income tax bands have been frozen. So this is somewhat of a constraint in response to the spending that has been taking place and will need to take place in response to COVID. There's also, in the rest of the world, there's concerns about inflation. So the 4.2% number that came out recently put the cost of living in the UK at a 10-year high. And in response to this, we might see, or we're expected to see, the Bank of England lead the way among the major central banks in terms of tightening policy. They did surprise us by not hiking in November, but the chances of there not being a hike next month seem pretty slim. This is probably just to do with them giving themselves a bit of a chance to have a bit more data to assess the impact of the ending of the furlough scheme, or the furlough payments from the government, which ended at the end of September. So these labour market concerns and supply chain concerns are also there across the board. So these aren't necessarily UK specific issues, but there are also areas of which investors may feel there is some uncertainty, and that does tie in with Brexit. And we also had an issue with a fuel crisis in terms of logistics and so on recently. So yeah, to reason it out, those are factors as to why we've seen things be overlooked. But now to look at, well, why should we be potentially looking at the UK now? Well, the valuation gap in terms of price earnings and price to book value is at an all-time high. So you're talking about a 50% discount for the UK versus US, and versus a 25% versus the Eurozone in terms of that valuation disparity. So is there, is it cheap now? That would be the question, regardless of whether or not those sectors have been in and out of favour. Is it simply a case of the price is now right? And we're also then looking at the sector distribution, because now that sector distribution, which perhaps hindered the FTSE 100, being heavy in commodities, financials, industrials, is arguably now in its favour, because this reflationary environment, this reopening environment, with commodities in terms of supply of oil, for example, being relatively tight, but demand returning to the market. Also, with financials being assisted by the rising bond yields, we are now seeing more growth exposed sectors in the FTSE 100, with that weight being leaning towards those, and perhaps not as much in tech, which not to say that it's time to cut and run and abandon tech, but it's certainly not been the top performer this year. And if things stay the same, we might well see this, sector performance continue into 2022. And a couple of other factors you've got as well is that the US dollar strength has helped the FTSE 100, which derives 65% of its earnings from overseas, and so in relative, dollar earnings will be worth more when converted back to GBP. Also, dividend yields much higher for the FTSE 100 as they are in their US counterparts. For example, the FTSE 100 yields 4.1%. So that in turn is also a bit of a hedge against inflation, which is a broad concern across the board. And finally, we've seen the FTSE 100 touch its February 2020 level only just this month. So they've been the total performance is about 14% for the FTSE versus 25% for the S&P. So now we've seen this shift in conditions. The question to be asked is, that gap is perhaps begun to close, and is there now some headroom for the FTSE to close that gap a bit further?
Yeah, definitely one to keep an eye on there. You mentioned the Bank of England sort of surprising us in this month, not raising rates. I think the next meeting is the 16th of December, so that'll be midday UK time. One for everyone's diaries there for any pound traders or investors or UK investors as a whole. Antoine, let's move over then to sort of to Europe and your sort of your thoughts on all of that at the moment. What's your sort of view going into 2022?
Yeah, so first of all, the ECB, it's an opportunity for Europe because ECB should keep rates low for longer, even if recently Christine Lagarde, the president, estimated that inflation in Eurozone would probably decline more slowly than expected due to the high level of energy prices. She's not expected to hike interest rate in 2022. The inflation rate in Eurozone reached 4.1% in October, which is the highest level since July 2008. It's the double of the target of ECB. But if this figure continue to increase in the coming months, it will remain difficult for the ECB not to raise interest rates in 2022. What's good for Europe and for Europe companies is that the euro is down 8% against the dollar this year. Above all, the new wave of COVID threatening Europe could even bring the euro back to the psychological level of 1.10 of dollars. So the fall of the euro it's a good point for all the indexes and companies in Europe. The euro is at the mercy of a slowdown in Germany. Germany is very dependent of China and vulnerable to energy crisis and possible further lockdowns, because in Germany the COVID wave is very important right now. Precisely in Germany, the three parties in politics, which are SPD, Greens, and FDP, finalized this morning the coalition contract detailing the broad outlines of their program for the next 4 years. So Olaf Scholz will succeed Angela Merkel, will thus become the fourth Social Democrat chancellor. But the problem of this coalition is like the Greens and FDP are divergent visions, which will be difficult to make the reforms. FDP want to increase, not to increase taxes and debts. Otherwise, Greens want to respect the Germany climate commitments. In France, the politics, we have the next election in 5 months. The two main concerns for the next president election are immigration, for one, and the second, purchasing power. Now, France have two extreme candidates, totaling 35% of the votes in the polls. But maybe Macron is at 24% of the polls and should be enough to win the election. He has no real opponent. Macron should return president because no opponent for him. So will be good stabilize the country, the economy. Concerning the sectors, luxury continues to perform very well. The third quarter earnings show that the growth in revenue and benefits reached again double digits. LVMH, Richemont, and Hermes. Hermes next week will go in the Eurostock 50 instead of Flutter Entertainment. So, which is a good thing for the company. Even though the price earnings ratios are high for luxury sector, I think there is there is great potential in 2022 for growth as long as Asia and US remain driving forces, because Asia and specifically China and USA is 75% of the revenues in luxury sector. Tech in Europe is still very far behind US and China. But the potential with the fall of the euro, but the problem is the potential rise in interest rate for the next years should be a risk for tech sector, which could underperform next year. On the other hand, we see as Adam said, like financial, financial in 2021 was a very great year, and 2022 might be a very great too, because with rising interest rate announcement and shares buybacks will automatically improve earnings for the sector. My favorite banks in Europe is BNP Paribas, which is the number one in Europe, which has impressive earnings quarter after quarter.
Super. Thank you very much for that. And it's quite interesting just having a look over the poll that we did. But we also, not too long ago, we did our quarter three retail investor survey. And basically over 12 countries, we asked 6,000 investors 25 questions. And one of those questions was just sort of on their equity preferences. And it wasn't surprising. I don't think it surprised anyone here, but US led that. With China at the time in a surprising second, but I'm with you, Quinn, on it, Nemo on it, that China's a good potential opportunity now. And at the time of this survey, the UK was actually the most out of favour of those major markets. So it's quite interesting to see now that this poll suggests that maybe the UK is or was overlooked and underloved, and now is that turning point. And Adam, you mentioned it sort of closed that February 2020 pandemic gap, and now maybe it can really start to kick on. In terms of the Q&A, we've got a bit of time. I think we're all okay to run over this session slightly. Nemo, first sort of question I've got from you, just from looking through the Q&A, and from your comments earlier about China. What's the bull case for the China internet platform stocks?
Yep, thank you, Sam. So I think it's very clear, right? Just like what I emphasized at the beginning of our session today. I think the bull case would be, China will remain the steady growth over the year in 2022, and they have less political tensions, especially towards the U.S. We don't want a lot of frictions between China and U.S. We all remember what happened back in 2018, right? I think I think the general market was down not only in China but also I'm talking about globally, was down between I think between 10 to 25%, right, across the markets. So point A is to have a steady growth. Point B is to have less frictions towards the U.S. And number three would be towards to the sectors that who had, especially for internet companies, who was punished, I would say punished by the central government, and hopefully that next year that they will have less scrutiny towards to the internet companies, right? But so far, I can tell and I can see from the papers that I've read and the mainstream media, I think less and less actions being taken by the central government, towards the internet sector, especially. I think that could be a catalyst, right, for us and also for the investors to monitor, right? So I believe those are the three key elements to watch out for 2022, and I believe if those three things, will keep in place and then to meet our expectations, I believe those will give a push for the performance of China equity and China internet sector overall. I think that would be the bull case. Yeah.
Awesome. Thank you very much, Nemo. Appreciate that a lot. Adam, question for you. Is UK small cap view different to that of the large caps in your opinion?
So in the UK, we've got two main indices, the FTSE 100 and the FTSE 250, which is the second tier. The FTSE 100 is very much internationally focused. It derives 65-70% of revenue from overseas, whereas conversely with the FTSE 250, it's much more domestic focused. So it's gives us more of a view of what's happening in the UK as opposed to a more international view. And in terms of small versus large, it's the opposite way around in the UK than it is in the US. So at the moment, the FTSE 250 price earnings is at a 30% premium to the FTSE 100, whereas that's actually the other way around in the US. The large caps are trading at a premium to small, so that potentially that's something that is looking undervalued over there. But here in the UK, it's the other way around, and we can explain some of that by the fact that there's a big weighting in financials in both, but the FTSE 250, 23% of it is in financials, and as Antoine mentioned, financials have had a very good year, and they could be set up to have a good year next year as well, given the current conditions. So there's also 5% GDP growth forecasted in the UK. That's something that for domestically focused companies, it should be a good sign. And in terms of the projected earnings growth, the FTSE 250 does in fact have that expectation at 85% versus about 8% for the FTSE 100. So on the face of it, you could say that there is a traction in the small cap case. Classically, over the years, it's outperformed. The 5-year performance of the 250 is 49% versus 26 for the FTSE 100. But again, just to add a word of caution, that there are potential headwinds of inflation, of the taxation environment in the UK, as well as the fact that the UK is potentially going to be ahead of other central banks when it comes to tightening. So that's something to perhaps put a word of caution when looking at the outperformance of the 250 at the moment, and also the fact that we may well see that FTSE 100 does play catch up because of those other sectors that have been unloved that are currently perhaps getting back into favour.
Super, super. Thank you very much, Adam. Last question of the session, of the webinar, and we'll do it, of course, for Antoine to get your thoughts on this. And common question, actually, that I saw: how exposed to the rest of the world is Europe, in your opinion?
In my opinion, Europe is very, very much exposed to the rest of the world. As we see, for example, in France, we see that the CAC 40, which is the main index, 60% of the companies are owned by foreigners. Luxury sector, which is 30% of the CAC 40. If there is not China and USA, they will be very in trouble. So the domestic for Germany also domestic doesn't I didn't say doesn't exist, but they are very, very dependent of the rest of the world. So for me, if the GDP of the world GDP slow down, Europe will be very, very underperform of the rest of the world. This year the CAC 40 is overperformed because this year is 27% of rising. So even if we are France is the last one of the poll. This year, maybe this is the best year for France ever. We'll see that, but we didn't see that performance from 1999, so for 22 years. We'll see.
Awesome. Well, yeah, don't worry too much about France coming last on the poll. But guys, look, thank you very much for joining. We discussed obviously in depth China opportunities there and Asia, UK and Europe. So hopefully you all found that very, very useful. I know I did too. Tomorrow at 10 a.m. UK time, we've got the webinar on themes. So make sure you tune in for that one. We've also got the last of the 5 webinar year ahead outlooks, which is next Wednesday at 1 p.m. And just to set the scene, we've got a very, very special guest joining us next Wednesday, so not one to be missed. But guys, thank you so much for joining. Nemo, Antoine, Adam, it's been a pleasure having you on, and thank you very much.
Thank you, guys.
Yeah, thank you.
Thank you, Sam. Yeah.
Take care, guys, and have a good rest of your day.
Thank you.